congratulating ET Now for the 15th anniversary. And congratulations, Nikunj, and your entire team. I think in the last 15 years, all of you have done an amazing job, and your channel has been a very useful source of insights and information for the business community. And I wish you all the best for the future. I'm sure the years ahead, the decades ahead are going to be even more productive and purposeful. Best wishes and good luck.
Let me congratulate and compliment you and the team at ET Now for all that you have done as we have grown through these 15 years.
Congratulating ET Now. This is just fantastic to see the progress. It's a great channel, one of my favorite channels, and congratulations again on the 15th anniversary.
Well, that's the word coming in from all market honchos as they wish us a very happy 15th birthday. It's 15 years of ET Now, and as you can see, our studio is decked up and we're really excited to have you on board with us today. Hi there, good morning. I'm Snehisha and you're watching Market Cafe on ET Now. Thanks so much for starting your day and your week with us. But while our markets were closed yesterday, the global markets were up and buzzing, and I'm going to take you through exactly that. Let's start by taking a look at what the US markets were up to, and quite literally up to, because stellar moves coming in across the US markets. Now, S&P 500 futures were near flat last night after a winning day on Wall Street as investors geared up for the May retail sales data. Those moves follow a positive session on Wall Street that propelled the S&P 500 higher by nearly 0.8%. Nasdaq has finished with a gain of almost 1%. Both these indices continue to reach all-time highs. They continue to scale new highs coming as well. 30-stock Dow has advanced about 0.5% to end 4 days of losses. So reverse momentum coming in for Dow. Good moves over there as well. Tech stocks have performed well in the session, helping the tech-heavy Nasdaq outperform and aid the broader S&P 500's rise as well. Broadcom climbed more than 5%. Apple has jumped 2%. Nvidia touched an all-time intraday record as State Street said that the chipmaker would likely see a weighting of more than 20% in the rebalance of its popular exchange-traded fund focused on tech. But the stock rolled over, ending the day down 0.7%. Despite that pullback, shares are still nearly up 165% on the year. That's Nvidia for you. Looking ahead, investors will closely watch retail sales data for May due Tuesday morning for insights into the health of the consumer. Now, economists polled by the Dow Jones forecasted growth of 0.2% from April. Other economic reports on topics like industrial production and business inventories are also expected this morning. Several Fed Reserve officials, including Boston Fed President Susan Collins, you have Richmond Fed President Tom Barkin, they're expected to speak at events across the country throughout the day, so lots of commentary to watch out for as well. So, well, that was largely the US. Dow 0.5% higher, S&P 0.8% higher, Nasdaq almost 1% higher. Shifting focus, let's talk about Europe. Slightly mixed moves coming in over here because DAX, remember, this counter was under pressure all throughout last week, is up 0.4%. FTSE, however, has closed nominally in the red, less than 0.1%, a 4-point cut coming in for FTSE, as flat as it could be, but with a slight negative bias. And Stock 600, however, has closed flat on the positive side, less than 1% rise coming in, so absolutely flat but with a slight positive bias. That's where your Stock 600 is. Shifting focus, let me also take you through what's been happening in the world of crude oil, and as of now, WTI at 80.35, above that $80 per barrel mark, and Brent also very close to 85 at $84.3 per barrel mark. That's where Brent is. Now let's take a look at what's been up with crude. US crude oil rose more than 2% yesterday to top that $80 per barrel mark, adding to last week's gains. WTI surged nearly 4% last week, snapping a 3-week decline and its best weekly performance since early April. And oil prices are rising on expectations that summer fuel demand will draw down inventories and tighten the market in the third quarter. Uncertainty over China's economy and growth in oil demand has long hung over the market. Now, OPEC expects the Chinese economy to grow 4.8% this year, acting as a primary driver of crude consumption in the developing world. The Paris-based International Energy Agency, however, has revised its global oil demand outlook on the lower side, citing some softness in China. Demand growth in China slowed from 800,000 barrels per day in the first quarter to 95,000 barrels per day in April. This is according to the IEA. As a result of this, the global oil demand growth will come in at 960,000 barrels per day this year, about 100,000 barrels per day lower than what was forecast previously, according to the agency. This is largely what's been happening with oil as well. Let me also lastly take you through what's been happening with gold. Gold as of now looking pretty solid, up 0.3% at 2,336 almost dollars per ounce is where gold is as of now. With that, let's also take a look at what's going to be happening in today's trading session. What are the important cues that you need to be watching out for? And well, it happens to be a 15th year anniversary today, but other than that, let's also take a look at what other events you need to be watching out for. From the global side, then you have retail sales as well as industrial production. From Eurozone, you have CPI. On the corporate action front today, you have the board of PNB Housing that will be meeting to mull fundraising, so watch out for that counter. Adani Wilmar, Tata Investment, Bank of India, all of these will be holding their AGMs as well. Today is the last day to buy shares of L&T Finance as well as HDFC AMC to be eligible for dividend, and Sharda Motor share buyback is also closing today. From the primary markets, you have Exigo. That IPO is going to be making its debut on D Street, so watch out for that as well. 1% lock-in ends for Innova CapTab, and like I mentioned earlier, you have a whole host of FOMC members, the likes of Barkin, Goolsbee, Logan, and a whole host of other members like Fed Governor Adriana Kugler all set to speak today, and PM Modi is also all set to release the 17th installment of the PM Kisan scheme, and roughly 20,000 crore amount coming there. But well, that's a wrap on what the global handover was looking like and all the important events to watch out for. But Winnie, you're joining us early in the morning in the studio. Also take us through all the important global stories that we're tracking this morning.
Absolutely. So a lot of global important stories that we should be keeping an eye on, because last week we did see those rate decisions that came in, and a lot of commentary that has come in terms of the front from the global markets. Like a lot of corporates and a lot of commentators have spoken about it as well. So what we're going to talk about and start in terms of the top headline coming in from the Asian markets, and we have Chinese May retail data that has come in. So yes, in terms of overall, the important update from China was that the second largest economy of the world, China, the sales for the month of May beat the expectations of the street, so logging a growth of almost 3.7% versus expectation of 3%. However, it was a miss across macro metrics and the likes of industrial output, fixed asset investment, and the industrial output grew by 5.6% year-on-year basis, while the fixed asset investment rose by 4% compared to the last month of last May when you compare it. Now, the total retail sales of the consumer goods reached around $540 billion. Urban area sales were up by almost 3.7%, while the rural sales were up at around 4.1%.
Alright, well, let's keep it going with China, because the pain in the country's real estate sector continues after home prices fell at the fastest pace in more than 9.5 years for the month of May. Data denoting that the sector is struggling to find a bottom despite government's efforts to rein in oversupply and support the debt-laden developers. Prices were down 0.7% in May from the previous month, marking the 11th straight month of on-month decline and the steepest drop since October of 2014. In annual terms, new home prices were down 3.9% from a year earlier, compared with that 3.1% slide we did see coming in April.
Absolutely, and more update on the China front today. A lot happening there, but shifting focus from China to the macro side on equities. Now, Berkshire Hathaway has continued to slash stake in Chinese EV maker BYD. Warren Buffett-led conglomerate has offloaded an additional 1.3 million shares. The Hong Kong listed share of BYD for around $39.8 million, reduced the stake marginally from 6 to 6.9% from previous 7%. And remember, Berkshire had offloaded half of its holding through sales in 2022-2023 after BYD skyrocketed nearly 600% to a record high in April 2022 from the start of 2008. So surely seems like some profit booking coming in on that front. Maybe you could say a marginal share that they've reduced right now in terms of overall the stake there.
Absolutely. Well, let's shift focus, talk about what's been happening on the front of the Fed. And we told you today a whole host of Fed members are all set to speak. We're getting some commentary in Philadelphia. Fed President Patrick Harker has said that the US Fed Reserve would be able to cut its benchmark interest rates once this year. Comments come after outlining his view that he sees slowing but above trend economic growth, a modest rise in the unemployment rate, and a long glide back to target for inflation as his base case. Additionally, he also said that while last week's consumer price index reading was very welcome, progress on inflation so far this year has been modest, and he needs to analyze more data over the coming months in order to take a decision given the overall choppiness.
That was all the global update that we have this morning, but we're going to slip into a very short break. Don't go anywhere because through the day we'll be celebrating the 15th anniversary of ET Now, and we'll take you all through more updates after the break. Welcome back. You're watching Market Cafe on ET Now. We are getting all dolled up and set up for the day today.
Absolutely.
But even the market seems like could have a pretty day because all the handover that's come in from the US market and Asian markets seem to have opened quite well. Look at Asian markets, and I want to start by talking about Nikkei first. That's opened up in trade with a gain of almost 1% right now. So strong momentum that we're seeing for Nikkei. So the Japanese market opened up strong. Look at whether you look at ASX 200. Now we do have the Reserve Bank of Australia, which will be coming out with a rate decision. Key factor to watch out for. But right now, quite perked up in trade. The handover that's from the US market is not bad, and we saw the S&P 500 also performing well, which is supporting. And the markets have rebounded after S&P 500 actually hit that new highs in yesterday's day before yesterday. I mean the last trading session, that was Friday, because yesterday also the US market was also closed. So yes, keeping an eye out on that. But what we've also seen coming in is in terms of Hang Seng and Shanghai. What are they doing? Because they are the latest ones to open. So Shanghai is just a bit of a flat line, you could say. It's flip-flopping between the red and the green continuously right now that you're seeing. So it's waiting for it to pick up a side for the Shanghai index, while in terms of Hang Seng, that's managing to hold on to some bit of a gain, and Hang Seng holding on to gains of almost 0.3%, like you can see coming in on your screens. So yes, Kospi also managing to hold on to gains. So everything right now saying indication is coming in that positive start is coming, except for Shanghai, which is just flip-flopping.
Absolutely.
We're seeing that
pretty flat, not much to worry about.
Yes,
in that.
so that is not like a negative fall that we're seeing.
Exactly.
So yes, a positive start for the Asian markets. Look at the Nifty implied open up almost 0.5%. So that also indication right now is that we will open on the positive side. But yes, hoping for a good start of the week and celebrating more of the 15th anniversary, even the markets, I hope so.
Absolutely hoping so. The markets also join us in our celebration today, because very good 120-point uptick penciled in. But before we head into today's market trading session and see what the day holds ahead for us, here's the news for the hearing impact. And we're celebrating it with a landmark event, the ET Now Leadership Dialogues. From a keynote address by the RBI Governor Shaktikanta Das to fireside chats with Dinesh Kumar Khara, Ashish Kumar Chauhan, Utpal Sheth and Manish Chakhani, it is going to be an event you cannot miss. Indian Hotels Puneet Chatwal and Tata Consumer Sunil D'Souza will also join us to discuss the future of hospitality and consumption. We will also have the biggest market voices and economists all throughout the day. So stay tuned to ET Now for mega celebrations.
That is coming in for the middle class. Now, sources suggest that the government is actively discussing a proposal to provide income tax relief aimed at benefiting the middle class. Although the discussions are still in their early stages, the focus is on potential tax cuts, simplifying the tax processes, and a final decision will be made following a broader consultation within the government. The PMO office has said that they will take the final call after reviewing various inputs. Notably, the Prime Minister has signalled the likelihood of some relief for the middle-class taxpayers, suggesting a favourable outcome in the upcoming budget. So, Snehi, surely we're going to be keeping an eye out on this budget, hoping for some relief coming in there for this middle class taxpayers.
Absolutely, lots to watch out for when it comes to the budget. You have different groups that are expecting a lot of different things.
This is the full-fledged budget this year that we'll be seeing.
Exactly.
So a lot that could be happening here, right?
Absolutely, lots to watch out for this budget. It's going to be another key event in July to watch out for. But shifting focus to an exclusive story then, sources tell ET now that the newly elected government has started its work, the all-important 100-day agenda to achieve deliverables, the likes of creation of e-commerce hubs, global trade promotion among the first few. Let's go across to my colleague Sameer Dixit for more details on this one. Sameer, take it away.
The Union Commerce Ministry has set a 100-day agenda for itself. The 100-day agenda focuses on to export, to increase the export, to boost the domestic manufacturing, and also to set up SOP, Standard Operating Procedure for the FTAs, the free trade negotiations. So to start with, the first priority of the Commerce Ministry is to develop and create e-commerce hubs in the country. But we are picking up from our sources that the Department of Commerce and the Department of Revenue, they are in discussion to create the e-commerce hubs. Now, these e-commerce hubs will help to boost the export. It will help the handicraft sector and also the other labor-intensive sector. In addition to this, the government is also looking to set up SOPs for the FTAs, the standard operating procedures. Currently, if you see, the government is having negotiation for the FTAs with the European Union, with UK, and also with Australia. In addition to these three FTA negotiations, there are 4 FTAs which are under review. Government largely is looking to have 10 FTAs in at least the next 5 years. But to achieve this ambitious target, they have to have a SOP that will further streamline and smoothen the entire negotiation process. Also, what we are picking up from our sources that the India-Oman FTA, it has almost reached to its conclusive point. Commerce Ministry has sent the cabinet note to the cabinet for further approval. Very soon, it is likely that within 100 days, we can see the India-Oman FTA coming to a concrete point. Also, government is looking to amend the SEZ bill, the Special Economic Zone Bill amendment. It is there in the topmost priority of the Commerce Ministry, and it will be pushed for the cabinet approval. Government wants to make more use of the SEZ which are lying vacant or which are not fully utilized. So for the same, the SEZ amendment bill, it is there in the 100-day agenda. Government is also looking to set up a single window platform that will provide ease of doing business.
Okay, let's move on. And reduction in excise duty helped curb the petrol and diesel prices despite the extraordinary international supply concerns. That's the word coming in from the Petroleum Minister Hardeep Singh Puri. Listen in to what else he had to say about the petrol and diesel prices.
We have been able to navigate the international situation, and Bharat is the only country where prices of petrol and diesel over a representative period have come down. In the case of petrol by about 2% or so, and diesel by a little percent, instead of going up. Now, how did we manage this? How did we manage this? Essentially, because the Honorable Prime Minister reduced the excise duty levied by the centre on 2 occasions, November 21 and May 2022. As a result of which, central excise duty came down, and all the BJP states also reduced the VAT that they charge.
All right, moving on then, on to some commentary about the event that is on everybody's radar, which is Modi 3.0's first budget in July. Vinny and I were just talking about it. Listen into what Sanjeev Puri, the CII president, had to say about what experts are penciling in and what is expected to be announced in this budget. Listen in.
Reform momentum should carry forward, in fact, even get better. And what we are from a larger reform agenda and also the budget, what we are looking for is really, the big ticket and difficult reforms which fall at the intersection of center and state to be looked at. labor, land, power, agriculture, fiscal sustainability, because these are important to unlock the true potential of the economy, to bring in competitiveness and unlock the potential of each sector. We believe that this investment on a public capex is increasing the productive capacity of the economy, besides on its own creating jobs and enabling the start of a virtuous cycle of consumption and investment. There could be greater focus at the rural areas. We need to also look at certain sectors that are labor intensive and provide some impetus to that.
Let's move on to the latest update on Zomato and Paytm that has confirmed that they are in talks for Paytm's movie ticketing business. Now, what sources say that the deal of selling the Paytm's movie ticket business to Zomato is pegged at around 2,000 crores, making it the second biggest buyout for Zomato. That could be after Blinkit, because Blinkit was the biggest buyout for them so far. Sumita is joining in with us to give us all those details. Sumita, what's happening here?
Yes, in fact, food delivery aggregator Zomato has confirmed to the exchanges that it is indeed talks with Paytm to acquire its movies and ticketing business. Now, this was clarified by an exchange filing that happened recently, wherein Zomato says that they acknowledge the fact that they are in discussions with Paytm for this transaction. However, and let me quote Zomato, they say that no binding decision has yet been taken at this stage that would warrant a board approval and subsequent disclosure. In fact, Zomato further clarified, stating that the decision is currently taking place with an intent to further strengthen their going out business, which is pretty much in line with the stated positioning of focusing on their 4 key verticals. Now, in a separate filing, Paytm has also confirmed that talks are currently on, but without actually naming Zomato as an entity. It basically says that the potential transfer of its entertainment business, which is a component of its marketing services, is an opportunity that's under consideration. Now, remember, Paytm plans to focus on payments and financial services along with digital goods commerce. In fact, it also mentioned that any discussions that are currently underway are preliminary and do not involve anything binding. Remember, just yesterday, ET Now broke the story regarding Zomato in talks with Paytm, for of course a movie ticketing and events business. The deal, according to what sources are telling us, is pegged at around 2,000 crore rupees, anywhere between 15,000 to 2,000 crore rupees. And we also were learning from our sources that both parties are in late stage of negotiations. Now, this move currently aligns with Zomato's plan to expand its goings out offerings. Meanwhile, Zomato is looking to capture a larger share of the market, to capture consumer demand across categories like food, grocery, entertainment. We see what's been happening with Blinkit. And in fact, if this deal materializes, this will be the second largest buyout for Zomato after the acquisition of Blinkit.
All right, that was everything that you need to know about the Zomato and Paytm's sourced deal that we are talking about. Of course, we'll be getting you more updates on that story as well. Now, Mahindra Group will remain committed to achieving their growth targets, says Group CEO and MD Anish Shah in an exclusive interaction with ET Now. He explains the strategy behind unlocking full potential of all their group companies. Listen into what he had to say.
All our businesses are positioned well. They've got a strong value proposition, which is why customers will come to us. They've got a strong execution as well. And that execution part is important because at times we've faltered in the past when we haven't executed well. So that's one thing we're pushing across all our businesses, is make sure that we can execute well, that we can actually deliver whatever we commit to our investors.
You know, M for Mahindra, M for Magic. That's what I always say when I look at your numbers. Whatever you've indicated, you've really managed to beat the estimates quite handsomely. In your forward guidance, which some would say of a 20% EPS growth and 18% ROE, some would say that that's very conservative because you're sounding optimistic, all your businesses are growing. So would you follow what you've done in the past, beat the numbers and beat your own estimates handsomely?
So Nikunj, when we set the target for 18% ROE, a large number of our analysts and investors came to us and said, "You're crazy to say this, you're not going to get there."
That was 2 years ago, but
that was. Now, we got there in 18 months, even though we had said we'll get there in 3 to 5 years. And since then, we have been consistent in saying that's actually a good target to have. It's a good target to have an 18% ROE on a consistent basis. And if we can manage 15 to 20% growth on a consistent basis, that's something an investor would absolutely love. So we've got fairly tough targets. We also have made them tougher because when we said this, we grew 84% in fact from an EPS standpoint over the last 4 years. And then we said, fine, let's take the first year out because that was a little lower. And therefore, it raises the bar for us in terms of growth as well. But we are comfortable with that. So at this point in time, we're staying with the estimates we have, but obviously the efforts across our teams is to over-deliver wherever we can.
While we are talking about the M&M group, we did have a lot of brokerages that have come in on Mahindra and Mahindra. Now, Nomura as well as Goldman Sachs, they both have hiked the target price for M&M. Now, let me take out from Nomura. They've hiked the target price to 3,374 rupees per share from the previous target price of 2,818 rupees per share. They believe that the battery electric vehicles is something that will be driving the growth for the company, and especially in the premium lane, they see high potential for farm machinery segment that could see a good growth. Further upside in the exports and growth gems is something that will also be driving the growth. They also see that they expect to deliver a marketing beat across their segments. So yes, overall, they're expecting a good performance. That's what Nomura is saying. Now, Goldman Sachs also has highlighted that, one, they're maintaining their buy rating, target price of 3,090 rupees per share from 2,700 rupees per share. They see a growth visibility and upside potential there. New EVs that could be priced above the premium ICE and SUVs is something that they're eyeing that could lead to an upward reset in the life space as well as service business for the company. So positive notes coming in for M&M, a stock to keep an eye out on. Last trading session, it was up almost 2%, more than 2% was M&M. Today, how it performs in trade is something that we'll be keeping an eye out on. Let's move on, talk about Nykaa, because Nykaa did have their Investor Day meet on Friday. We did have some highlights that came in, but what brokerages are saying on Nykaa and what they believe is the key highlight coming in. So what we're seeing is, one, BofA is maintaining a neutral rating, target price of 186 rupees. Macquarie underperform rating, while Goldman Sachs also is maintaining the neutral rating. So not much of an upgrade that's come in post the investor presentation, I beg your pardon, that came in. It was a huge presentation. There were a lot of key highlights that were highlighted. BofA is highlighting key points. What they found was, one, in terms of the strong growth targets that we see across the segments that were given. And this was a target they've given for FY28, for most of the segments when you talk about fashion, beauty, personal care. So that was an interesting one to watch out for. There was room for surprise if the targets are executed well. That will be working out well for Nykaa. Macquarie too, they said that they expect capital to intensify in terms of remain moderate, and they expect to sustain beauty EBITDA margin. They see tepid pace of margin expansion going forward. So keep an eye out on that one. And Goldman Sachs too is highlighting that, the guidance for fashion and B2B business was above what the street was expecting. So that is a positive side. That is one thing that could work out well. They expect the GMV CAGR growth of around 26%, what the company highlighted over FY 24 to 28. And overall, they remain quite constructive on the BPC segment as well. So yes, BPC currently is a very big part of Nykaa, and fashion is a niche segment which is growing faster. But yes, overall, they're expecting BPC to remain quite constructive. Keep an eye out on Nykaa today. Let's see how that performs in trade.
Absolutely neutral and underperform calls coming in on consensus for Nykaa, so watch out for that. But viewers, we'll slip into a very short breather on this edition of Market Cafe. More stock-specific news and updates when we return, so you stay tuned.
FNO Ansh is joining in with us as always. Ansh, good morning, and could you take us through what should we be keeping an eye out on the FNO space?
Good morning, Vinny. So let's start with what FIS did in the previous session. In index futures, they added around 11,000 long contract and they added around some 700 short contract, due to which the net addition was around 10,000 contract, due to which the total long is around 47.5%, which is just around 3% away from getting majority on long side. Also, if we see in previous week, then we are seeing that the net short got squeezed by around 80-85% by FII. So this is a bit of positive sign coming in from FII. But if we talk about retail, then the previous session, they added around 5,000 long, but they also added around 9,000 short. And this is the ninth session of short addition we are seeing from retail side. So this shows that they are getting a bit cautious in the current market. Now, if we talk about Nifty, then index has been consolidating for around 5th consecutive session, and they are not able to touch that psychological mark of 23,500 from last 2 sessions. So actually, in the previous week, we saw that on Tuesday, Wednesday and Thursday, strong call writing was happening at 23,500 strike, due to which Nifty was not able to touch this mark. But on Friday, we didn't see the same trend going on. We didn't see any strong call writing happening at 23,500. So we may have some open space on upside today. Whereas on downside, we are seeing a put writing happening at 23,400, indicating traders are expecting some good support around this level. Now, if you talk about Nifty Bank, then similar to Nifty, Nifty Bank has also been consolidating. If you can see in the chart as well, this is the 7th session when we are seeing that it has been consolidating in a sideways range. And on upper side, we are seeing some strong resistance at around 50,250, 300. So unless and until we don't see a decisive breakout from this level, we may continue to have a neutral stance and sideways market here. In index future, we are seeing open interest increasing by around 1.5, 1.6% for Nifty Bank, which is a bit of positive sign. Lastly, let's have a quick view on few stocks in focus. And we are seeing significant long build-up happening in ABB India, ICICI and Cummins India, where short build-up for Balrampur Chini, Emphasis. Also, let's have a quick view on ban list as well. And today in ban list, we have Balrampur Chini, GMR Infra, Hindustan Copper, India Cement and Hindustan Copper. So keep an eye on these stocks.
All right, Ansh, thanks so much for taking us through that. We now have Jinay coming on board with a list of all the stocks you need to be watching out for today. Jinay, good morning. Take it away.
Well, good morning. Well, on the back of order news, RVNL will be focused as it emerges as L1 bidder for East Coast Central Railway project. Consideration amount is 160 crores with an execution timeline of about 24 months. JNK India will be in focus as it wins 2 orders worth 350 crores each from Reliance Industries for a gas cracker unit. Also on the back of fundraisers, IRB Infrastructure Developers will be focused. They've got an approval for issuing of NCDs aggregating out 128 crores on private placement basis. Also, TARC gets a nod to increase funds on the back of NBFCs, banks or fresh issues on private basis for amount not exceeding about 750 crores. Now, Purvanka will be focused as wholly owned subsidiary of the company. Provident Housing has acquired rest of the project in Goa for the consideration amount of about 90 crores, and they have also purchased the landowner share in the same project for about 122 crores with a potential GDV of about 215 crores. Also, Bharti Airtel will be in focus as they have prepaid 7,904 crores of dues for high clear cost deferred liabilities for the spectrum which they acquired in 2012 and 2015. Godavari Power and ISPET will be focused as they will be doing a buyback of about 21.5 lakh shares, equating to about 1.64% of the total equity capital, and they will be buying this at a price of rupees 1,400 per share for amount not exceeding about 301 crores.
Thanks so much for that, Jinay. Keep an eye out on those important stocks in trade today. We could see a bit of a move. But we have a new listing today on the D Street. Exigo will be making its debut. So the IPO price was 93 rupees per share. And what we saw in terms of if it lists at a premium of 30%, that is, 121 rupees, then maybe that would be almost a valuation of 42 times that one could be watching out for. Now, other than that, peer comparison, when you look at it also, Exigo is one of those travel companies where you can book tickets. They've spoken about how they want to focus on the domestic front as well. So it's very interesting to see this debut making the list and making a debut today. Ease My Trip Planner, we have Yatra Online, that is there, as well as IRCTC, which also comes into play because Exigo wants to focus on that train side as well, train travel as well. So that is why when you look at Exigo in terms of the valuation, currently in terms of FY26 PE, cheaper than all these other peers that we are seeing. And financial also, the CAGR growth when you look at it in the last 3 years, that's been around a revenue CAGR growth of 162%, PAT CAGR growth of around 121%. So yes, keeping an eye out on Exigo today, I want to watch out for in trade. Seems like a pretty listing that we could watch out for here, Snehi.
Absolutely. Well, let's watch out for how that IPO makes its debut on D Street today, and we'll be keeping a close eye on that front as well. But viewers, lots to watch for. The market will take all the action ahead. But on that note, Winnie and I will bid you goodbye. Thanks so much for watching. You stay tuned. The market is up next.
If you like this video, then like, share and subscribe to ET Now.